You know, Richmond, we used to come on this show a year ago and talk about whether we were whistling past the graveyard as the credit crisis was starting to show itself in the credit markets and in the real estate markets. What is sort of the underlying fundamental that is going on out there right now? You're a big developer. Are you able to tap capital at all? A month ago you said it was still pretty hard. Has it improved at all with these latest moves?
Not at all. Capital sources are going back. We're getting notices from a lot of large public pension funds. Their boards are not allowing them to put out any new allocations. However, Cody, we are seeing some movement in the housing market. There's a 75% increase in sales over last year in Southern California on homes actually selling at a much reduced price, but they're moving. So that means we have hit a bottom. Things are starting to move, but it's really strange, a lot of strange messages, because at the same time, you have a 70% increase in foreclosures from last year at this time.
Hey, Teddy, real quickly, you know, we've both been doing this a long time. Sandra talks about a capitulation. This feels like, you know, not one capitulation all at once, Teddy, but maybe 1,000, you know, death by 1,000 cuts type of capitulation. How much more do we have to go down before people are capitulated?
Well, believe it or not, a lot of folks down here were looking for that today on the opening, and there were actually some disappointed people when we didn't get it, because they thought that all the pieces were in place to get that kind of action today. And when it didn't happen, I mean, there were actually a lot of disappointing folks down here in the sense that they thought maybe we could finally flush out the system, and it would have happened in the first couple of hours of trading today, and obviously it didn't. This is 1973, 74, all over again.
So, Teddy, on that note, I mean, you know, if you're looking at the 70s, I even go back to looking at the 30s and how long it took. Warren Buffett cited 1932 as a good time to buy. It took 35 years before the Dow was able to get to its highs of 1929. Everyone's sort of used to a 2 to 3 year or 2 to 3 month downturn in this economy. Is it possible this is a 5-10 year type of muddle along in the stock market? We're trapped between 7,000 and 9,500?
Well, I mean, I think if we could stay trapped between 75 and 90 and 9,500 at this point, I think I'd take that. I think the answer is there is no answer. We don't know. It's really a product, I think, of how much damage is being done, and there is a lot of damage being done. I mean, basically, you're chasing people away from the market that might never come back. We might need another couple of generations to get people back interested in the market again. We just can't measure the extent of the damage. And I would agree with you that there is a certain expectation that we will go through this and miraculously we will bounce back, you know, in 3 months, 4 months, 6 months, whatever it is. I don't know that that's in the cards. It's not going to zero, but we could go through a long period where basically nothing's happening.
Right.
You know, and Richmond, my question for you is, one of the bright spots today was the existing home sales numbers came out better than expected for September. We've got new home sales coming out next week to look forward to. They're expected to drop about 2%. But my question is, Treasury Secretary Henry Paulson has said the market won't turn around until the housing market turns around. What do we look for next week? And if we start to see better numbers here, could this stimulate a rally in the stock market?
I think so. What we're looking for next week is for Paulson finally to hire some asset managers to get into the reverse auction to take some of this bad debt from the bank's balance sheet. When that happens, it'll start to move again. The other good news is new home starts are down at 1982 low. So that's a good sign. We have 11 months of inventory that exists, so it's a good thing. So I think if sales continue to move at any price, that's a very positive thing to get it moving again. But we have to stop the foreclosures somehow.
You know, Eric's used the word capitulation. My favorite word is the Illuminati. I'm going to put them together. I think the market and economy can finally bottom when the Illuminati capitulates. Right. Is there any?
09:59.
Yeah, beat that 10-minute mark. Teddy, how about that? I mean, we keep hearing that we've had a million guys come on this show and tell us that the government would just intervene. We were going to be okay. The credit markets, they're getting worse, man. What's the end game here?
Well, I mean, the end game is, unfortunately, whatever it is, we just have to get through it, Cody. I mean, we don't know how long it's going to take. But I think the housing, you know, there is some signs of life in the housing market. I don't think it matters where the houses are bought from, who's selling the houses. The fact is, we're starting to eat through that inventory, and clearly that's a positive. And there are some signs that the credit markets are beginning to unthaw, if you will. It's not going to, none of this is going to happen overnight. It's going to take time. And listen, oil at $65 and $66 a barrel is a lot better than oil at $140 when people said it was going to $200. I mean, this will all eventually have positive traction in the economy. It's just going to take time. We're going to get through it. These clouds will go away. We're going to be okay. We just need a little, I guess we're just going to have a little more pain.
You know, something we touched on a little bit earlier in the day with David Asman, there's been a massive unwind of the carry trade. I don't want to get too wonky with you, but there's been a trade that's been very profitable for people who are willing to take risk. Now, in this environment of, you know, risk is toxic, they're unwinding that trade, and you're seeing a lot of things like, you know, speculative buying in certain stocks in emerging economies, oil buying in gold. That's all selling, and they have to buy the yen. If you take a look at the chart of a yen, off the charts.
13-year high.
Very strong.
There are margin calls in just about every asset class on the planet.
We've taken almost 3 years worth of profit out of that. It may be ending.
And the same thing with stock market too, I suppose, right, guys? Guys, Richmond, McCoy, Teddy Weisberg, thank you so much. Thanks, man. Great to see you, Richmond. Thanks for joining us, Teddy.